Hey guys, what's up everyone? It's Eric here, Mr. Fired Up Wealth. Without question, technology has and will continue to change the world and how things are done. Technology, which certainly has its pros and cons, has improved our lives in many aspects over the past couple of decades. I think that trend not only continues, but also accelerates. How can we as investors profit from secular growth trends? We have covered several of the secular growth trends in previous videos: 5G, cloud, AI, autonomous driving, fintech, and cannabis. You can view these videos on the channel, but what about healthcare? What are some top stocks in the healthcare sector that have both innovative and disruptive technologies? Today, I'll cover one potential stock for you to investigate. That stock is Teladoc Health, stock ticker TDOC, which is the largest global supplier of virtual healthcare services, linking patients with doctors and other medical experts over the internet, which is a rapidly growing, low-cost, and convenient method of delivering healthcare. We are seeing an explosion in demand, not just in the US, but also globally. So let's dive into Teladoc and see if it's a good investment. I'll cover not only the bull case, but also some potential risks. I'll simply discuss the unbiased facts that I've uncovered through my homework, and you can make your own decision. I'm excited to present this information to you, so let's get started. Okay, guys, so first, let's take a look and dig into what Teladoc Health is. What's the company? What do they do? What are their strengths and weaknesses? Let's just take a look at the company from a high level. Teladoc Health, you can go on the website here. This is showing you what we do, who we serve, about us, and you can go in here and you can drill into these and read on your own. One thing I like to do sometimes when I'm doing stock analysis is I'll use a few different websites. Stock.card's one that I use for the key information tab. It's really handy. It breaks down really quick, some key metrics like who the company is, their IPO date, which I really like, the market value, and then the earnings, the next earnings release date. So just real quick, let's read this. Who is Teladoc Health Inc.? Teladoc Health Inc. is a telehealth platform that delivers 24-hour on-demand healthcare via mobile services, the internet, video, and phone. Its platform connects members with a network of physicians and behavioral health professionals. The firm receives the majority of its revenue on a per-member, per-month basis from subscription access fees. The remainder of the revenue comes from visit fees. Teladoc partners with employers, health plans, health systems, to offer their solution to their members. Teladoc's platform matches members to healthcare providers in real time and is customizable for members, clients, and providers. Now, my wife actually used Teladoc recently with great success. She was able to talk to a doctor online, just through the internet, take a couple pictures, get everything resolved, get a prescription, and not have to go to the doctor. Saves a lot of time and money. So it is very convenient, and obviously, these days, it's all about convenience. So that's kind of a quick snapshot of who they are. The IPO was in June 30th, 2015, so about a little less than 5 years ago. The market value is $6.17 billion, and their next earnings release date is on February 26th of 2020. And again, you can go up on the Teladoc Health website and you can drill into what they do, what they serve, about us, get more information. But that's just a high level of what Teladoc Health is, who they are, what they do. I'm going to play this quick video while I read some additional information. So the first and obvious reason that one would like the company is due to their current leadership in a rapidly expanding market. If you've invested in growth stocks before, you know the most important thing to look for is a company with a dominant position in a market with explosive growth. It seems so simple, yet so many people don't include it in their analysis. Does the company have leadership? Teladoc currently does. A company with a growth quality like this will, of course, be more expensive in terms of valuation, especially if you're late to the party. It's much more difficult to use fundamental analysis on stocks like this. Many people will use the intrinsic value when analyzing growth stocks like Teladoc. So let's do that. But first, what is intrinsic value? In finance, intrinsic value refers to the value of a company, stock, currency, or product determined through fundamental analysis without reference to its market value. It is ordinarily calculated by summing the discounted future income generated by the asset to obtain the present value. I took a look at the stock using a two-stage growth model, which simply means taking into account two stages of a company's growth: the initial period where the company has higher growth rate, and then of course the second stage, which usually assumed to have a more stable or slower growth rate at maturity. I won't bore you with all these details and numbers, but from a high level, when you look at Teladoc's present value of 10-year cash flow, the terminal value, and the present value of terminal value, the stock seems in range to slightly expensive. Keep in mind, this type of analysis is extremely volatile, and I never use the calculation by itself to invest in a single company. It's simply one metric that I use on growth stocks like this to help make a final decision. So let's dig into some additional data. First, let's look at some growth stats. So the global health market is actually projected to expand at an approximate rate of over 25% over the next several years, reaching a total market value of $267 billion by 2026. That's over 25% in annual growth. Now, $267 billion in 6 years, that's an enormous number. And if it's accurate, an enormous opportunity for a company like Teladoc, who is currently the global leader in the space. This demand is fueled by an aging population, societal demand. Think Amazon and the convenience of having things come to you. Teladoc basically is the Amazon of healthcare. Also, consumer demand for lower healthcare costs, as well as improved rural access. Those are all driving factors here to this growth. You can see on this chart, so the one stat is 267 billion. That's the global health market, and then the U.S. telehealth market. That shows obviously explosive growth in that chart. If you take a look at that, that goes back to 2014 and has projections to 2025. And if you look at obviously 2020 right now, we're just under 2,000, and this is U.S. dollars per millions, right? So we're talking about a huge opportunity because we're going from 2,000 to 16,000. So that's an 8x by 2025 in 5 years. Is that accurate? You know, obviously these are projections, but if it's even close to that, I mean, the amount of money, the amount of opportunity there is just staggering. Now, in the third quarter of 2019, Teladoc's revenue grew 24% to $138 million on an increase of 45% in total visits. On that earnings call, the company's CEO, Jason Gorevic, said he's confident in top-line growth of 20 to 30% for the foreseeable future. Since the close of July 2nd, 2015, the shares of the stock have gained over 200%. In the last year, the company has outperformed and the share price has increased over 55%. So the stock has made a big run, but let's dig deeper into it and see if it's maybe not too late. Okay, secondly, let's take a look at membership growth. Now, Teladoc's strategy includes a model that investors love, which is subscriptions. In the third quarter of 2019, Teladoc's members who pay recurring subscription fees grew over 55% to 35 million people. Additionally, their pay-per-visit model more than doubled to 19 million. So how does Teladoc grow memberships? Well, primarily by going after large hospitals, health plan providers, and healthcare systems, as mentioned in the intro. These organizations offer services to their clients and employees. Last quarter was the largest jump in patient population in the company's history, primarily because of 15 million new members that onboarded from United Healthcare. The giant health plan unit of United Healthcare Group launched an app for all of its members in October that offers Teladoc's 24/7 telemedicine services to 27 million plan participants. But here's the deal. There are many more of these large organizations out there, and I think Teladoc continues to hit home runs like this. You can take a look here, membership and visit fee only access. So this is a comparison for QN September 30th, 2018, 2019. You got year-over-year growth of about 55% on the paid membership, and then 101% growth on the visit-only access. So really good growth. There's some additional numbers that you can take a look at, down here, including the U.S. visit fee only and a few others. But the key ones really to focus on are this year-over-year growth is still very, very strong. Okay, guys, so membership growth is great, but are these members coming back and continuing to use the service? Let's look at utilization. This is an important metric that a lot of people fail to look at when they're looking at growth companies with subscription models. Now, it's critical in analyzing why. Well, you need your members to keep coming back in order to maintain sustained growth. In the first 3 quarters of 2019, Teladoc's utilization rate was 9.27%, an increase from 8.86% in the same period from 2018. You can see right down here, utilization. And I'm just on their website, and this is from their financial statements, their Q3 2019 earnings report. You can go online and get this and take a look at it yourself in more detail. I'd like to see higher numbers than this, honestly, but they're actually still really positive. So don't get me wrong, these are good numbers. I'd like to even see it higher personally. Why is the metric important? It indicates that clients are happy with the service, they'll continue to use it, and more importantly, that they're more likely to keep paying for it. Recurring revenue, obviously you want them to be happy. You want them to think the service is valuable so they continue to pay it each month and each year. Expanding utilization by a growing membership is resulting in exponential growth of visits for Teladoc. At the end of 2019, the total number of visits since 2014 hit about 10 million, and that's up 5.9 million from the end of 2018 and 3.3 million the year before that. So all in all, that's very impressive growth. Okay, next, let's look at expansion areas. It's important to grow membership growth, but where are other areas of opportunity to expand the business? Teladoc leverages over 50,000 medical experts across 450 unique areas. It seems like a staggering number to me. Why do we care? Well, because it helps Teladoc with these expansion areas such as nutritional counseling, mental health, and other additional services. Mental health is a huge problem with a tremendous growth opportunity for Teladoc. Mental health revenues grew over 50% in 2019 to around $90 million, but there's a ton of room for growth in that area. The thing with mental health is that it requires multiple visits. In fact, 80% of Teladoc's mental health visits are from repeat users. Okay, guys, what else can we look at? So next, let's look at global growth, because obviously they do have a global footprint, but the majority of their growth and their business has been in the United States. Subscription fees from customers outside of the United States account for just under a quarter of the total right now. However, it's growing rapidly, up over 55% in 2019, and Teladoc executives are excited about the opportunities internationally. Many European countries have nationalized healthcare systems. However, there are competing private insurers out there, and many of those have actually adapted Teladoc's full suite of services in order to differentiate themselves versus those government programs. Teladoc currently delivers care in 30 languages to patients in 130 countries. And you can take a look on their website here. You can see New York is their headquarters. They've got Boston, Massachusetts, Dallas, Texas, Phoenix, Arizona, Sunnyvale, California, Toronto, Canada. This is North America. South America, they have Santiago, Chile, Sao Paulo, Brazil. They're in Barcelona, Madrid, Paris, Brighton, London, Budapest, and Lisbon, and then Shanghai, China, as well as Melbourne and Auckland, New Zealand. So Melbourne, Australia, and Auckland, New Zealand. So pretty good global impact, but lots of room for growth in this area. Next, let's look at some finances, actually. So I'm going to go back into the finances, and let's look at the revenue. So here are the financial highlights for the third quarter and 9 months ended for September 30th of 2019. One thing I really like about healthcare is that it does really have some insulation from economic downturns. It's not completely immune by any means to, some kind of bear market that might come up, a recession, but healthcare is always needed both in good and bad times. Additionally, subscription fees tend to have more stickiness in those types of situations. Teladoc, in theory, should continue to grow even in a recession, albeit, of course, at a slower pace. Teladoc isn't profitable yet. However, they did reach operating cash flow positive last quarter, and Teladoc has been leveraging its balance for acquisitions, especially to boost international expansion, as we just mentioned. In 2018, the company bought a virtual healthcare provider, Advanced Medical, to boost its footprint in Europe, Asia, and Latin America. And then in early 2019, Teladoc bought Medicine Direct, a telemedicine provider in France. So Teladoc has $490 million in cash and expect it to continue to make acquisitions in 2020 and beyond. And it's funny because I, started to make this video, and just today is January 12th, they announced on their website here, corporate news, January 12th, 2020, that Teladoc Health is to acquire InTouch Health. And I haven't really spent a lot of time digging into who InTouch Health is, but to my point, they are continuing to make these acquisitions to expand growth, and I see them to continue doing this. Even they just did one today, but it's early in the year, so I won't be surprised if they do a couple more yet before the end of 2020. Okay, so Teladoc, obviously the strengths haven't gone unnoticed by Wall Street. The share price has risen 55% in 2019. It's gone up already in 2020, and the stock sells just over 10 times revenue. It's a high flyer, high risk stock. As mentioned earlier, it's nearly impossible to evaluate companies like this without really any conventional fundamental analysis being used. It's expensive. You're paying a significant premium based on speculation. And there are some risks that we'll get to in a minute, but let's just take a look at the chart. Whether you're a technical trader or not doesn't really matter that much. What I always tell people is even if you're a fundamental investor, it's good to have some technical knowledge just to understand when to buy and sell positions. So if you want to be a long-term investor in a stock and hold it for the long term, obviously it's good to buy it when it's at a better price. Right now, if I were to break down the technical analysis on this and look at all the oscillators and moving averages and everything, which I have done, I've spent a lot of time on this one. It's actually a strong buy, and it's breaking out, and it looks like it's going to trend above that. I mean, if you look at this is a 5-year chart, and this is what a growth stock looks like, guys. Obviously, if you could have got into it in 2017 or even 2018, the beginning of 2018, you'd be up pretty significantly. But heck, you could have bought, just like anything, you could have bought it at the end of 2018 when everything got hammered, and you'd be sitting, at over 100% return. It was $44.74, now trading at the $85 mark. 86.04 was actually the all-time high on September 24th of 2018, and we're currently trading just around that 85.16 mark here in early 2020 in January. So if the overall market pulls back, which it looks like it probably will, it might, obviously these high flyer stocks are going to take a hit, and this is going to come down. But if this thing dips, I would definitely add to my position. You got to make your own decision, row your own boat, as a friend of mine would always say. But technically speaking, unless the overall market has some sort of collapse, right now, as of close on Friday, today is January 12th. So as of close on the 10th of January 2020. Technically speaking, it was a pretty strong buy, and you would be in a good position here. So I personally wouldn't buy it right here unless it had a pullback. But at the same time, a lot of times when these do retracements, if you've heard of like a Fibonacci retracement, you see a 125% return to the mean. So that means that this could be a $100 stock pretty soon. But if there is some sort of dip, I will add, I do have a small position in this. I wish I had more of it. I wish I would have bought more of it, just like a lot of stocks, 6 to 8, 12 months ago. But take a look at this one. Take a look at the chart. Take a look at, some of the fundamental information, but more importantly, I think on something like this, the technicals as well, when you're making a decision whether or not you'd like to buy the stock. So far, we've talked a lot about some great positives and some great momentum and opportunity for Teladoc Health, but what about the risk? Because don't get me wrong, there are some significant risks with this company, with this stock. As discussed earlier, Teladoc is losing money as it invests in expansion. So if the market sentiment turns against risk in 2020, this stock will get slammed, just like it did in late 2018. When the market gets hit, stocks like this, these high flyer stocks, they get hit harder than anybody else. And that's because big investment firms that are invested in these, the smart money they call it, if they're up 50% and the market's going to, take a turn, and they're looking at their oscillators saying it's going to be a 5% pullback, they know that a stock like this is going to get hit harder than the overall market. And so they can sell and take their 50% profit, sit on cash, wait for the market to turn around, and then just buy it right back. And that's how they take money from retail investors. So you have to understand that that's how that works, especially with high flyer stocks. So you either need to play the game with them, or you need to play it long, and you need to relax and not panic. And that would be by dollar cost averaging and adding to your position when it takes a big dip. That's how I do it. You make your own decision on that. But just keep in mind, this is a high flyer, high risk stock. And if the overall market, say the S&P 500 is down 1%, a stock like Teladoc will be down maybe 5%, maybe more in a single day. So if you can't handle that type of volatility, that type of risk, you can't stomach that, definitely don't touch stocks like Teladoc Health, because these are the type of things that I invest in, and there are some really, really bad days with stocks like this. The volatility, can be amplified tremendously. So with all that said, I mean, they're burning cash at an alarming rate, but I understand these type of companies. I've done my homework on it. The biggest risk for me for this is competition. And remember earlier when I compared Teladoc to the Amazon of healthcare? Well, it turns out that Amazon wants to be the Amazon of this space as well. And right now, my favorite stock for 2020 is Amazon. They aren't a direct competitor to Teladoc, but it's Amazon Care Initiative. And you can see the website on your screen. It links people to doctors via an app. And right now it's limited just to Amazon employees, but that might and probably will change. The two platforms look very similar. And as you know, Amazon has the resources to roll out Amazon Care at a national and maybe even a global level if they really wanted to. Let's take a look. Here's the best of both virtual and in-person care, your first stop for healthcare, urgent issues like colds, allergies, infections. This is basically Teladoc. It's the same exact concept, guys. Who's eligible right now? Amazon employees and their families, employee that are 18 plus, yada, yada, yada. Here's your care options. Here's our trusted team, hours of operation. So Monday through Friday, 8 a.m. to 9 p.m. So you basically can call in or, go through their app, I guess, and talk to all these different doctors. And, it gives you a little bios on all these different doctors. This is, again, guys, for Amazon employees, but don't get me wrong. I mean, Amazon has done crazy things before, and they're very ambitious. So keep that in mind. Amazon, it's big into data analytics credibility. And I'm sure that if they wanted to, they could really take advantage of that very effectively against a company like Teladoc, and very ruthlessly, as you've seen in other industries. And look at retail, for example. I also think that other competitors, not just Amazon, are a risk to Teladoc Health. I mean, there already are a bunch of these little companies out there, and it wouldn't be hard for a dozen or so companies that come to my mind, these big companies, to roll out a competitive product. Apple and Google come to mind. They've been trying to push into healthcare, and they've got the means, they've got the money. How hard would it be and I've said this about lots of things with Apple. I mean, if Apple wanted to roll out a ride sharing app, is there really any loyalty to Lyft or Uber, really? And you've already got, Apple phone and Apple infrastructure. I mean, a lot of people do. I'm just saying, guys, just always be thinking about the big picture when it comes to stuff like this. I like Teladoc, and it is the leader right now, and that is significant, but I am very cautious. And I mean, if it pulls back, I'm going to add more shares, like I've said before. But be very careful with the stock, because, there are some risks out there, guys. So do your own homework, do your own research, do your own due diligence. I spent a lot of time in this video, and I hope that it's helpful to at least give you some information and some facts and give you a great starting point. But I want you to go out and do your own homework, especially when you're buying high-risk stocks, like this one. This could be a home run long-term, but it could get beat up really badly, especially in the short term with any kind of pullback. Right now, the market seems like it could be overheating, and this is one that might take a hit. But keep it on your shopping list, keep it on your eye or on your radar, and it might be something that you want to add to your portfolio and your speculative basket of stocks. I appreciate your time. Again, I hope this video was helpful. If you enjoyed this video, we've got lots more. I think there's dozens more videos on the site, and we're constantly adding new videos each week. I'm trying to do 1 to 2 videos a week right now. If you haven't subscribed, please click the bottom right button, the little subscribe button. There's also a little bell you have to click to get notifications. And then also go to Facebook. If you use Facebook, I have a page called Fired Up Wealth. There's also a private group that you can apply to. And we have about 1,000 people in that group now, but it's growing very quickly. It's only been around for a handful of months. And we use that as a forum to talk daily. We even give trade ideas, not only on a weekly basis, but oftentimes daily. There's a wide mix of people in there, from long-term investors, growth investors. We've got some day traders. It's just a very good group of investors, and we try to all, learn from each other, because there's a lot of different ways to make money, and it's great to get other perspectives from other people, and that's what it's really all about. So thanks for your time again. Have a great rest of your day.